We are in an environment where, household economies in Europe are in a much better shape, are going through a much more violent shock if compared to the household economy, at least for now, in the US. So when dealing with euro dollar, you are dealing with the pair, you're dealing with the differential vulnerabilities between those two groups and those two blocks, right? I mean, and I think that this is the story. That's what brought us down here in terms of euro dollar below parity, and our outlook and our trades and our positioning on the strategy side, they are definitely biased towards further euro depreciation from where we are now.
And what is generating that view? The growth outlook, the interest rate differential, the carry trade? Is there something else going on here?
Carry trade is dead in euro dollar now. It's about the exposure and the vulnerability in the European economy when it comes to the shape of the household economy, and it comes to the magnitude of the energy shock we are getting in this block. I mean, and UK included, of course. I'm not only talking about EU, and obviously, what does that mean in terms of economic outputs? That's the story we are now. We are in a story of a downside, a fierce downside bias in the manufacturing cycle in Europe. And let's not forget that there is an additional layer of complexity here coming from the China slowdown, which obviously, hits Europe with a much higher magnitude if compared to the impact in the States. So it's pretty much glaring now, the expression in Europe. And talking about ECB liftoff, I mean, I think this is, I don't remember our last interaction here, I was talking about this euro dollar fallacy, of the ECB fallacy, and I think that this is now becoming absolutely glaring, that the ECB room to lift rates here will be minimum, right? And it goes back to the leverage aspect that you two were talking about before we started this interview.
Luis, the violence good morning to you, my friend. And I'm loving the 1980s headset, by the way. There's a man who hasn't spent money on a new headset for a while. But the violence we're seeing in the foreign exchange market, is that being reflected enough in other assets? There is relative calm, and I say relative, despite the moves of the last two sessions, in the equity markets as well. They found a level where they want to trade this as well. But is the violent levels we're seeing, 20-year lows for the euro versus the greenback, etc., big lows for the pound, etc., big lows for the yen as well, is that being reflected enough in people's risk levels in other asset classes?
My view now, Steve, that, yes, we had this little, actually it's not little, it was, significant, but nothing but a bear market rally in equities, right? We still find very difficult to get involved into the deeper levels or the riskier levels of the equity risk here. For example, emerging market equities, I find very difficult. But obviously, that was in a way supported by this cap in interest rates as soon as the markets realized that, recession in many parts of the developed world is actually coming. Right. So, and that obviously had a detrimental effect on the FX side, going back to my point where, the markets up until, April, May, the markets were considering, a pretty hawkish flight path here for ECB, for Bank of England. And at the end of the day, I mean, is that this trade of this positioning has been imploded over the past couple of months, and that obviously has a very important impact here. That's why I'm telling you that the carry perspective in the FX markets now has been severely hurt, and this the carry position of the carry strategy. We are now dealing with vulnerabilities more than carry.
In terms of when you go into the meeting with your team and you speak to the clients and that, and you say, look, there are some trades that are just massively mispriced out here. Where are the biggest glaring mispricings from the market at the moment, the trade that you think our viewers can possibly make the most money?
I think it's the broad dollar. I think we are still, it's a generic trade of broad dollar, even though, fair enough, positioning has changed. Right, but we are still in an environment where investors don't have enough dollars And I think this is probably going to continue to influence dollar versus EMFX, euro dollar, cable, and very important crosses here out there that, I mean, they are not necessarily in the right price. I still think that broad dollar is not necessarily well priced given the relative vulnerabilities we have out there.